Testing. Good morning, everyone, and welcome to the Quantum Leap Morning Leap for Wednesday, July 27th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live sessions to go over the market, macro to micro, the structure of the market, then drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room, so if you'd like to check it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. We do it live in this go-to every day before the market and then during the trading session. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trading plan, and your own risk metrics. Okay, so taking a look at yesterday, our main two hypotheses, which has basically been the same for the whole week, is basically going to be the same again today. But our main hypothesis was a move down. Hypo 1 was move down, find buyers between the naked VPOC and the 57, maybe even down to the 55. And then rotate back up through range and value and go and take out that all-time high up at 72.50 that was put in the Globex. Hypo 2 is a failed breakout and a rollover and a move down towards that 53 and possibly a continuation wave down into the 49.25 warning line. We kind of get a combination of both yesterday, and we certainly have found balance. You can see right here, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days of balance. The microcomposite VPOC has shifted back up. It had shifted down to 59. It now has shifted back up to 60.75. The last 5 days, though, the sellers have been stepping in here at the 67 area and creating what we basically have is a triple distribution with 67, 60, 75, and 46, with the 49.25 and the 64.25 as the CLVNs, or the areas of price rejection. Going to step back, just take a look at the news. Of course, today is Fed Day, FOMC. We've got news that just came out. Core durable goods was a miss. Durable goods orders month over month was a miss. And then we've got pending home sales and at 10 o'clock and crude oil at 10:30. But of course, the big news will be FOMC statement with the federal funds rate and whether or not we get a rate increase or not. I don't expect a huge amount of move prior to the news, but they're certainly coming up and accepting the 67. You can see that the overnight VPOC is sitting here at 67, so we're in that upper distribution. We've got good kurtosis here at 67. The miss on the news only dropped us down, like six ticks at the most, and then we're right back up here. So somebody is holding this up, and we're likely to get a move early in the day higher up towards that 69.75 RTH all-time high, maybe even pop up into the 72.50 and then go sideways into the news. But let's just step back for a minute, take a look at where we are macro to micro. I like starting on a monthly, use a 9 EMA, 20 SMA, looking for slope and separation. where the trend is being violated. You can see on the monthly, beautiful trend, challenged at the end of the 2015, beginning of the 2016, and then we're back above it, and we're getting a continuation pattern with new all-time highs put in on the monthly. Going to the weekly, we've had this parabolic move, and we put in a new high again in the Sunday Globex session. We do have a technical gap. The gap will close all the way down here at the 2117.50. All of you know that I'm watching that 2114.50, which is the 50% of the significant breakout candle of the balance that we broke out of on July the 8th. But the trend itself is up on the weekly. On the daily, you can see that we're getting a little bit of exhaustion here, and we've tested the 9 and we're going sideways. The key is, do we hold above the 9? If we don't, I'd be looking for us to come back down towards that 20 SMA and likely towards that key line in the sand at the 2138 and a quarter. Anything below that, I think we get the bigger move down, and that could happen if we do get a rate increase today on the Fed news. Going to the intraday, very quickly, you can see we're starting to get continuation. We've had consolidation, starting to get a little bit of slope, a little bit of separation. So the continuation pattern is there on the 1 hour. I'm sorry, 4 hour. On the 1 hour, you can see we do have slope and separation. They challenged it, but they keep popping up. The buyers keep coming in. We're above the 9 and the 20 right now. On the 30-minute, you see that we're in consolidation here, but above the 9 and the 20, possible continuation pattern. And then the 15-minute consolidation with possible continuation, and then the 5-minute. And see we've got an upward slope and separation and a start of an upward trend. So going back to the structure, again, this could be perceived on a longer time frame as a, as a flag, bullish flag up here. But I think news is going to set the tone for the rest of the week. If we don't get a rate increase, I'm looking for new all-time highs above that 72.50. If we do get a rate increase, I'm looking for them to challenge that 38 and a quarter and possibly break that and go down into fill in some of these gaps down here below. Taking a look at the overnight, and none of these levels have changed this whole week, so I don't have to spend a lot of time on them. Just go and watch the other videos if you're new here. So looking at overnight they put in a overnight high at 69 and a quarter. We have an overnight low at 63. Our VPOC is right there at the 67. And that's sitting right on top of the value area. You can see yesterday we had a triple distribution day, so the levels are going to be pretty easy. Just move this over here. We don't need this chart anymore. There's no real more information we need from there. And then, so we've got the value area high, which is also overnight VPOC. That's going to be a trade level. I'm not going to use the 68 because it's been violated already. Use the overnight high. It looks like they're going to go and try to put a new over Globex high in here even before. You can see on the upper Keltner, on the Keltner chart, we're in the upper channel, and a move up to test the upper Keltner is going to take us up into the 71. But then we've got the LVN right here at 64. That's a key level for us now. It has been the last couple days, the 64 and a quarter, the CLVN from that upper distribution between the 67 and the 60.75, and then right here we've got the 59. Now I'm going to use the value area low, but I'm going to use it as a range between the value area low at 58.50 up to that LVN at 59 and a quarter, and I want to be, if I'm going to use this as a trade level to get into a trade short, I want to make sure I'm below the 58 or above the 59 and a quarter. And remember that that 59 is not too far off. It was our microcomposite VPOC starting yesterday. It only shifted to 60.75 with the volume that came in yesterday. So could get a little bit of chop in that area. And then below that, you've got the 53.75, but there's the range low that we had at 53 and a quarter, so you have to include that 53 and a quarter. And then below that, all our targets remain the same. Our warning line at 49 and a quarter, the next big target down at 46. The daily, the 20-day ATR is running at 23.26. So off of the current Globex high, our downside ATR daily target is 21.46. And we are continuing to compress that 20 period daily ATR. To the upside off the low, our daily ATR is all the way up here at the 86 and a quarter. Our weekly doesn't change. The weekly high is all the way up at the 2204, and the off the bottom, our weekly takes us down to 21.22 and a quarter, so near that 17 and 14 area. So those are all the levels there. Nothing needs to change. We're going to use all the same levels. So the main hypothesis this morning is a open auction just out of range or just in range. Now, if we open out of range, if we go on, we've got another 20 minutes to go. If we go up and open up somewhere in the 69 area, I would be looking for the possibility of an open drive. So open auction out of range or open drive, a push up into the 69.75 to 72 area, and then chop around there into the FOMC. And based on the FOMC, I'd be expecting a big move up and new all-time highs if the rate increase doesn't come, and if it does come, then a push down. But overall, you know, if we open up inside of range, my main hypothesis is going to be an open auction in range down to the 61 level, 59 area, then rotate up through, come up into the 69 to 72 area and chop sideways into the news. Whether we do it right on the open and go up there and chop, or we come down to find buyers lower down in the 60 level. The key level to watch for is that 64 and a quarter level. If we get below 64 and a quarter, I think you got a good short down into the 60, 75, 59 area. Just watch how we handle that 64 and a quarter. But if they open up out of range, then I'm looking for them to go and make the quick pop and then go sideways. So Hypo 1 is kind of a hybrid where we're either going to open up just out of range, and either we get an open drive up into the 69 to 72 area and chop there, or they come down and either reject the range high, the 64 and a quarter, or they come down to the 59, 61 area, maybe even the 58, and then start rotating up. So that's Hypo 1. It's kind of a hybrid hypo, like I said. Hypo 2 is a push up into the 69 and then finding responsive sellers and then rotating us up down into the 61, and then we go sideways there and we take the news in around that 60-75 in balance. So either way, I think that we're going to either come into the news in the 69 to 72 area, or we're going to come into the news in the 60 area in that middle distribution. and which one it is, I don't know, but I've got levels that I'm watching and hypothesis of how it's going to play out. The third hypothesis is a push up, make a new high at 72, and then push up into this 82 area and up into these measured moves in the 84, 86 area and chop around in there until we get the news, and then based on the news, failure, and back down into the middle distribution here in around the 60, 75, or a continuation and a pop up into testing the 2200. So that's hypo 3. And then hypo 4 is an open auction just out of range, and then failure, come down into the 60 to 58 area, chop around there, push down, and come into the news down in the 46 area and chop around there into the news, and then based on the news, either a pop or a drop. If we drop, keep an eye on the 38 and a quarter. Anything below 38 and a quarter, I'd be getting short for a bigger move down to test that 18, 22, 18, and 14 level. Currently, the Keltner center line is at 65 and a quarter. We're above it. We've got a strong, slow grind channel up. A move up to the upper Keltner is going to take us up into the 70s. If we get below the 65, look for them to test at 64. And if we get below the 64, a move down into the lower Keltner is going to be down here at 59 area, that key distribution. The levels are very clear. Is just where they're going to take it. But we've got clear defined areas of price rejection that you know you're going to be wrong at quickly if they get above or below those areas. So use the 64, the 58, and the 49 as your key areas of rejection, and watch how the price action, the order flow happens around those levels. Again, I'm still at the cottage. It's a beautiful day here, so I'm probably going to trade just for a few minutes on the open, then step away, enjoy the sunshine and the lake, and then come back and be here for the news. As always, trade well, trade safe, and we'll catch you on the flip side.